So Nicholas Bornodis again of Captelling, I would like to welcome you to another very interesting panel. This session is on charting corporate strategy, global commodity shipping in the decade ahead. I would like to thank Andy McKeran from Lloyds Register for moderating this panel. I'd like to thank the panelists. We have a top level group of panelists. Thank you for being with us. And without any more delay, I will turn it over to Andy and say a huge thank you to all of you.
So firstly, a huge thank you to Nicholas and the entire Capital Link team for hosting this panel session today. As always, many thanks. Today, as Nicholas says, we are addressing a critical and pressing topic, global commodity shipping in the decade ahead, charting corporate strategy. We have a great panel today who will give their valuable insights on how their companies, from across a variety of different shipping segments, including dry bulk, gas and tankers, etc., are adapting to the changing regulatory, technological and market landscape in the post-COVID-19 era. So as Nicholas says, my name's Andy McKeran and I'm the Business Director for the Maritime Performance Services at Lloyds Register. As way of a quick introduction to the panel session before we introduce our panelists and then open up to the Q&A, 2020 was a year that stopped us all in our tracks. Our routines had to change. We had to rethink our processes, and we've all reappraised what we do and how our actions affect others. There's no question that the pandemic has been a disruptive force in many ways, and its impact has been profound. In the maritime industry, our collective resilience and adaptability has come to the fore. Our appetite for and acceptance to technology has grown, and we've seen accelerated digital advances. Furthermore, many of us have had a much sharper focus on how our businesses can contribute to a green economy recovery. A lot has happened in the past 15 months, and while there may have been a few delays in getting things done as we first navigated the COVID-19 landscape, for many in maritime, it has been, or has now become, business as normal. Furthermore, the regulatory wheels have kept turning. The meeting of the Marine Environment Protection Committee, or MEPC, last November saw amendments to MARPOL Annex 6, with new requirements addressing greenhouse gas emissions expected to enter into force late in 2022, pending adoption at MEPC 76 next month. The Energy Efficiency Design Index for existing ships, or EEXI, and the operational carbon intensity reduction requirements specifically have the objectives of technically efficient new and existing ships, operated efficiently to achieve the IMO's interim level of ambition for 2030. Applicable to vessels over 400 gross tons, the EEXI generally requires pre-EEDI or EEDI certified ships to catch up with their new construction contemporaries that meet the latest applicable phase of EEDI. Owners are having to look closely at their fleets. Compliance with EEXI is now essential for ships to continue to trade. And there are many reasons to think that consistently maintaining a carbon intensity rating of C or above in the scale of A to E could now become a vital commercial and regulatory risk management strategy. There are without question a number of variables that ship owners and operators will have to take into account as they determine their corporate strategies in the decade ahead. How EEXI might affect their tonnage, to how the pursuit of performance efficiencies may reshape ship operations and redefine maritime winners and losers. And all this is happening in an environment of change as traditional ways of working continue to be recalibrated by all companies. That said, we only have 45 minutes for this afternoon's discussion with a lot of ground to cover with a phenomenal panel of shipping leaders. So Kristian, starting with you, please can you introduce yourself, your company, and share your key lesson from the pandemic and how it may reshape the way you do things in the decade ahead. Kristian.
Yeah, thank you. Thank you very much, and hello everyone. I'm Kristian Sorensen. I'm the CEO of Avance, and I'm very pleased to join you for this session. Avance is an LPG shipping company specializing in the very large gas carrier sector, the VLGC sector, and we currently have 13 vessels on the water, where 6 of them are scrubber fitted. We are stock listed in Oslo, where we are one of the companies in the John Fredriksen sphere, like Frontline and Flex LNG, who are also participating on the panel today. In Avance Gas, we also have an extensive new building program of 6 state-of-the-art LPG dual fuel VLGCs, which will hit the water from December this year and into 2023. Our fleet renewal program will boost our commercial operations and capacity, while at the same time reduce our environmental footprint considerably compared to fleets with conventional propulsion engines, coming back to your point in the introduction. So moving on to some key lessons from the pandemic. I would say, number one, as a shipping company, ESG has become an integrated part of our daily activities and operations. And I would say, first and foremost, that safety and the health and well-being for our crew on board the ships have been of great concern since the pandemic spread around the world. And I think since World War II, it's probably never been such a challenging time globally for our seafarers. And every day we're facing difficulties and hurdles to safely change crew, disembark crew members with critical illness, protect our crew from COVID-19 infection, and so on. And I must say, the mental condition of our crew on board the vessels is something that we're following up very closely. So, I mean, this is number one lesson from the pandemic, that the safety and health and well-being of our crew and personnel on shore as well is number one priority, and has to be. And number two, I would say commercially, it's become even more important to handle the market volatility and be able to handle the risk through our chartering strategy, which has to be agile enough to sustain shocks and volatility, both negative and positive ones. The VLGC market is like the VLCC market, very volatile, and we have been over the last 12 months, through periods of $100,000 a day down to OPEX levels of around $7,000 a day, and now hovering $40,000 a day. So it's important to be able to handle the risk and the market volatility. And at the same note, I would say that when the time is right, it's important to de-risk and bolster the balance sheet. Something we did when we entered the market for a private placement earlier this year to raise equity for a new building program. And it's important to have a sound and prudent debt to equity ratio. On the positive note, I would say a key takeaway is that new technology has been implemented and absorbed during the pandemic, and the adaptability of the workforce, both the sailing crew and the onshore personnel, has been just tremendous. So if you look at how quickly we all learned to work from home with our laptops, new headsets, software systems, it's definitely encouraging to see how quickly everyone has adopted to the new world and the way technology has been absorbed. So, I mean, who would have thought that "you're on mute" would be the number one phrase that office workers remember best from the pandemic? So I mean, both commercially and from an ESG perspective, there are definitely several key takeaways from the pandemic that we would like to highlight.
Thank you very much indeed, Kristian, and some great observations. And seafarer well-being is an absolute critical item on everybody's agenda moving forward. Lars Christian, moving to you, same question, if you don't mind. Introduce yourself, your company, and the key lesson from the pandemic, please.
Thank you very much. My name is Lars Christian. I'm CEO of Belships. We're a ship-owning company listed here in Oslo. We've been active last couple of years expanding our group, and we now own 26 modern vessels with everything commercial and technically managed in-house. And I think during this pandemic, that's been the key for us, at least, in order to keep our ships sailing and crew safe. Shipping in general has a reputation for being old-fashioned, but I think this pandemic has also shown how adaptable we all are to crises. I mean, as this came on top of all the fun and games around IMO 2020. So, yeah, if anything, it's a reminder to always have a low case in your cash flow model.
Fabulous. Thank you, Lars Christian. Good advice. Yngvil, moving to you, please.
Thank you. My name is Yngvil Åsheim, and I'm heading up BW LNG. BW LNG is part of the private part of the BW Group, which is a leading maritime company. We are involved in shipping, but also in floating infrastructure, oil and gas production, and we also have a sizable investment into new sustainable technology and renewables. BW controls today a fleet of around 420 vessels in different segments, and we have the biggest gas fleet in the world, about 190 LNG and LPG vessels. BW LNG itself is running 25 LNG carriers and 5 FSRUs. I think I share many of the same lessons learned as Kristian and Lars, but it's been a striking demonstration of adaptability and to see how we can find solutions when we are under pressure and we actually have to. And I think that bodes well for some of the challenges we have ahead of us. It's been really an eye-opener to see how we have been able to speed up our digital journey. And a simple example is 1.5 years ago, we sent out circular letters to the crew, and then we had officer conference and maybe reach our captains every 2 or 3 years. Today, we are chatting on Teams and doing town halls exactly the same way as we do in the offices. So, it has speeded up a number of things. We have even done digital commissioning of an FSRU. Who would have thought that? So I think that is one thing. Then secondly, this gradual or growing realization of the daunting task we have ahead of us to reduce emissions. It would maybe have happened in any case, but I can't help it thinking that us being stuck in our homes, having a bit more time to reflect on it, has also accelerated how we think about climate change and what we need to do. And for me, two things there. It's the need for collaboration and the need to take action. And it's easy to set these ambitions. I think we know what we have a task here. So now it's time to take these actions and implement what can be implemented. And for me, we have a solution for reducing considerably our emissions by switching to LNG and LPG as fuel, as both Avance and BW LPG is doing. And so go for it. The engines we are installing is also flexible enough to burn a number of other alternatives and zero carbon fuels as they come along. So let's act. And for the development of the new solutions, we have to work together. I mean, we are competitors, but here we have a task that we need to work together, not only ship owners, but all the stakeholders to what we are doing. And lastly, I also would like to just emphasize this immense gratitude I feel towards our seafarers that has kept the world trade going.
Here, Yngvil. Yes, thank you for mentioning that at the end. So some good lessons learned and then collaboration and action moving forward. So Oystein, over to you and same question, please.
Yeah, I'm Oystein Kalleklev. I'm CEO of Flex LNG Management. We are LNG shipping company. We have invested $2.5 billion in brand new LNG carriers. So we have 12 of these on the water now. Last ship due on May 31st, and then we have finalized our current LNG new building program. So we have built all the new type of ships. The LNG industry has been a bit of an oddity, where you have steam propulsion was the standard propulsion 10, 15 years ago, all the way, while all the other shipping segments left such an inefficient engine a long time ago. And that, we've seen as an opportunity to build new, much more efficient ships, which are close to 60% more efficient than the old steam ships, which were the base case 2008. So the EEXI regulation coming into force now will just even make our business strategy stronger. I think we have heard about a lot of lessons here for the COVID-19, since this is also an investor presentation or conference. I would say one rule which is always applicable in any crisis: never run out of money. never be forced to issue equity at the bottom of the cycle, because then you would destroy a lot of shareholder value, if not everything. So we've been very prudent there, financing our vessels in advance, having a very big cash position. So now once we're getting out of the COVID-19 crisis gradually, we started repaying dividends, first 10 cents, 30 cents, now 40 cents, buying back our stock at the cheap, and instead creating more shareholder value. So having a prudent position in terms of liquidity, having a good banking group, that's always valuable if you're in a capital-intensive industry like shipping.
Fantastic, Oystein. So yeah, don't overgear or over-leverage the organization and hold a healthy debt to equity.
You can get higher if you just have a strong liquidity position, so you can bear some losses. So it's not, some people say, okay, you have to do low leverage. I like high leverage, but a lot of cash.
Yeah, very good. Thank you for that. And last but by no means least, we'll go to Lars, please.
Yeah, thank you. My name is Lars Barstad. I'm the interim CEO of Frontline. We're a tanker owner. We're running 68 modern tankers, making us one of the largest tanker owners in the world. We're listed on Oslo Stock Exchange and the New York Stock Exchange. We're currently running around 17 VLCCs, 29 Suezmaxes and 20 LR2s / Aframaxes. We recently ordered 6 VLCC new buildings. Again, you know, kind of motivated a bit around the discussions that we're going to have today with regards to preparing for kind of the increased transportation needs going forward, but more efficiently and with less emissions. You know, I would obviously like to echo kind of all the other guys here on the panel, and ladies, sorry, on the panel about kind of one of the lessons learned is definitively towards the seafarers. You know, it showed us how vulnerable we were, and it also showed us, you know, how kind of owners and managers and kind of the entire value chain managed to move together in order to help kind of our seafarers to manage this you know, troublesome period. And I'm really happy basically to say that we're now starting to vaccinate our seafarers. Some of the seafarers come from nations that don't really have a good vaccination plan in place, and this is you know, obviously an effort and a cost that the owners are willing to participate in spreading vaccination you know, kind of to our crew. With regards to another lesson learned from the pandemic, you know, when we were sitting here last year, we were obviously in the tanker industry looking at some tremendous markets. You know, we had demand was starting to stall, but supply was still relatively high, meaning that we fairly quickly ended up in some sort of storage economics. I think the lesson learned is that you know, there was obviously the COVID-19 pandemic was a black swan. It was you know, the first black swan we had was actually Saudi Arabia and Russia starting a price war, and then the third black swan was actually how rapidly and how quickly the global oil markets were able to adjust to the output volume. No analysts in the world, you know, kind of rewinding back a year, expected the oil supply to be able to react this quickly, but it happened. So basically, it's been like a black swan year, and you know, I think kind of some of the volatility we've seen on supply, demand, on freight pricing, on basically a lot of various indicators is something we're hopefully never going to see again.
Great, thanks for that, Lars. And I think negative oil prices is certainly something we don't want to see again, and that contango that was created in the market of supply and demand, even in the short term. So thank you for those insights. Oystein, I'm going to come back to you now because you'd mentioned it. I'm going to turn to regulation. So how will EEXI and the subsequent operational carbon intensity reductions affect your sector? You mentioned steam turbines, you know, I'm going to say in terms of the efficiency part of it. And then more importantly, what are you doing as a business currently to address that? So Oystein, first to you, please.
Yeah, thanks. I think I've been talking about this, I would say, revolution in the propulsion system that has happened during the last 15 years or so. I've been talking so much about it that some of the other owners are a bit tired of hearing it, but I don't mind. I'm going to repeat it anyway. So what's happened is you've gone from a steam turbine, which is basically thermal efficiency around 35%. Then you got to a 4-stroke diesel electric engine, which is about 40% efficient. And then you're going to the modern propulsion for a big ship, which is a 2-stroke engine, but which is dual fuel. So you can burn both gas and liquid fuel, and it's 52% thermal efficiency. So this is a huge improvement. And also during that, you also built bigger ships. So you've gone from a standard size steam being 125 to 145,000 cubic to more 170, 180,000 cubic. So this all translates into better freight economics. So the kind of the unit transportation cost on all ships compared to old steam ships is close to 60% lower. So that of course means that charters can pay a higher freight rate for more efficient ships because they're also paying for the fuel. We are burning part of the fuel as now a cargo as a fuel. So this is what we call the boil off. And of course boil off gas has, the amount of boil off, because these are basically propellers with a thermos with propellers, and the boil off has gone down from 0.25% every day to now getting to a level where the incremental improvements of getting it lower isn't that much, because you are talking here about, let's say, 0.07, 0.08% per day. So you need some boil off in order to fuel the ship. So making it a bit lower now, it doesn't give that much bang for the buck. And then we have been talking about this regulation coming into force, and I think people have been a bit surprised at the willingness to actually reduce carbons, because this is not just hot air anymore. This is happening for real, and even bureaucrats and politicians are willing to do something about it, which creates a business opportunity, because what will the consequence be of more stringent rules? It is the fact that older, inefficient steamships will retire earlier. And the retirement age in LNG and shipping industry has traditionally been quite high, 40 years. So that will come down for older ships. And potentially, we don't know yet. We will see how stringent the politicians and bureaucrats will be in terms of the methane emissions, because we basically emit two types of gas. What we have on the tank is methane, and then you burn the methane and you emit CO2. And of course, the CO2 emissions are much lower on the newer ships. But some of these ships, the 4-stroke diesel electric ships, they don't burn clean. So they not manage to burn all the CH4, so that is vented. And that, of course, gas is much more potent than CO2. And if CH4 emissions are included in the EEXI rules, that will have dramatic consequences for all tri-fuel ships as well. So not only the 200 steamships, but also the 160 or so dual-fuel tri-fuel ships. So it will be exciting to follow the development. It's not that easy to get compliant in LNG because of this boil-off. Every day you have a boil-off, so you need to burn that. If you vent it, it's much worse. So then really the only alternative is getting into relic systems, but some of these older ships are already very slow. So you don't really want to go slower, and it will be hard to trade those ships. And really, do you really want to make so big investments on older ships in order to maybe extend their life for just a couple of more years? So I think the new regulation will create more business opportunities for us, and I think we will be rewarded for investing proactively in the modern type of ships. But down the road, eventually, we also do need to find better ways of coping with the CO2 emissions, both in the upstream part of the LNG value chain, downstream, but also in the transportation phase. But I think these ships, the original IMO baseline was 70% carbon intensity reduction from a base of 2008. And if you look at the LNG shipping industry, the base is only steamships. So I think actually this is realistically to achieve today with the current technology.
Some really interesting observations there, especially around methane abatement requirements, carbon capture requirements, etc., even with the efficient ships. And I think it's going to become the supply and demand aspects around, retiring, old tonnage versus return on investment. So some great observations there. And thank you for that, Oystein. Lars Christian, same question for yourself around EEXI and CII and how that's affecting your sector and what you're looking at.
Thank you. I mean, in our segment for bulk carriers, first of all, I mean, it has actually tempered the old habit of ordering too many ships. So that's great. We actually have a good market now with a very small order book, and that's a very good starting point to tackle these future regulations and reach the ultimate goal to reduce carbon footprint. So in that respect, I'm quite optimistic. There is a very adaptive industry out there within bulk carriers, which with the existing fleet has a huge potential to actually adjust the speed and operational efficiencies to deliver a big part of the potential targets. And then of course we do expect that there will be new designs, new technologies available, which has to be invested in, and I'm certain there will be risk capital available for that for shipping, and I'm sure there will be more than enough to finance this in the future. There is a very adaptive and risk-willing sector in shipping. We don't get a lot of subsidies or very long charters to finance all this, so there's a adaptive and ready ship owner market to adjust to this. I think the main fear I have is that we need to avoid jumping the gun too early about building new ships which aren't really new. Because the classic thing is that you go build a ship which is 5% more effective on the assumption that the person with the oldest ship is going to scrap or recycle. It just doesn't hold water because the cost level on these old ships is very low. So they will turn around and say, well, we're happy to reduce our costs. So I think that we have to hold off on jumping on new buildings for a while. For us in Belships, we have a modern fleet which, in terms of efficiency, I think we're in the top 10 percentile, and it appears we're prepared for these new benchmark indices towards 2030 with our fleet today. Another thing we've done specifically with this in mind, because we're not really certain on these future regulations, is that we've financed this on so-called optional leases. So we actually have a real and viable solution to turn around our company and fleet quite drastically towards 2025 and 2030. Because 70% of our fleet, which comprises on all the most modern ships, are financed on these optional leases, whereas the other end are the older Supramaxes, which we are actually in process of phasing out and selling now. So I think that might become important in the next few years. Actually, how are you going to offload? How are you going to sell? Are you going to sell in a great market? Or you wait till the last minute? This phase out, I think, is very important, and being a bit patient on the new building side.
Thank you, Lars. Kristian, you've moved us nicely on to financing, because I think we've spoken about strong balance sheets. We've spoken about operational power limitations, for example, maybe to reduce speed. But there is going to be a large amount of existing tonnage that will need to make additional operational improvements around things like Flettner rotors, air lubrication, and other efficiency measures, maybe to meet the EEXI and probably certainly the CII as that comes. So moving to Lars B, how will you be looking at financing any operational improvements that may be required? I mean, will this be done on your balance sheet, or are you looking for some of the green tech funds? And do you believe that owners are getting enough assistance to look at some of this retrofitting of additional equipment to meet new efficiency requirements? Lars?
Well, I would like to maybe turn it a little bit around. First of all, we're kind of in a lucky position here at Frontline that we we don't really have those large investments to make, at least not initially. We're obviously kind of fully aware of our position with regards to EEDI or EXEI, kind of as we approach 2023, and we're very comfortable with that situation. But kind of down the line, obviously investments are probably needed to be had with regards, or to kind of move forward in line with the regulatory kind of framework. But I think I'd like to kind of echo what Lars Christian said. It's important not to jump the gun here. I think there's going to be kind of an array of solutions for the various owners going forward, either on fuel, propulsion, or other kind of technological advances that might come. The thing is, I would like to make a comparison to what we saw when IMO 2020 was about to happen. You saw very few owners actually making the investment decision until there was actually a slight chance that you will get rewarded for it economically. I think you have to understand, and it's particularly so for tankers right now, we're in no position to invest a lot of money to cater for kind of providing a service to the industry for the next 10 years. That has to come via mechanisms in order to make it kind of economically viable. I would like there's a famous quote from a well-known Norwegian environmentalist, and it says, going green by black numbers. And it's really important, to incentivize the industry, because, although we really, really want to kind of, be ideologists and so forth, we also have a responsibility towards our shareholders and to make a return. And we're not really there to make that investment right now because we don't know kind of how it's going to play out for us, to be quite honest. So, but there is a lot of kind of financing available. The kind of ESG and the green shimmer has reached obviously the financing market and the funds and so forth. So the capital is available, and also at very good terms. And we've seen some one of the companies in the same sphere as we're running, kind of issuing green bonds and so forth. So I think there's an entire industry around that to help us when we are in the position to make the investments.
Thank you, Lars. Kristian, same question for yourself, really, around this in terms of the financing availability.
Yeah, thanks. And for the VLGC segment, the picture is a little bit different than what you see in the tankers and the dry cargo space, since the dual fuel technology has pretty much been accepted as the next generation of propulsion technology. And if you look at the order book, I mean, all the ships are today ordered on the basis of a dual fuel technology. So, but again, capital has in general become more selective than it was, let's say, 5 years ago. But speaking for ourselves, at least, we find capital readily available from the conventional capital sources. For instance, we took up new debt from our banks to finance our scrubber retrofits on our existing ships, while we tapped into the public capital market earlier this year to raise equity for a dual fuel VLGC new building program, where we also have received great interest from conventional banks and leasing institutions on our debt financing. So I would say that in general, our experience is that there is ample capital out there. The challenge is to get the charters to chip in on the green transition, to accelerate the move to greener shipping, I would say. And if ship owners were even more incentivized to buy a carrot, not only a stick, I believe the green transition of shipping would move even faster. So right now it seems more to be a system where there is a preference for green ships rather than a willingness to pay more. That's one of the problems I see in the next phase of the transition.
Thank you, Kristian. Yeah, sticks and carrots. And now I'm going to come back to Yngvil in terms of collaboration and action. And I think it's the same aspect of this. But Yngvil, in your view, I mean, how would complying with EEXI CII change the relationships between the key stakeholders in the industry? And building on Kristian's point, particularly around the owner-charterer relationship, I think we've seen movement in things like the Poseidon Principles, the Sea Cargo Charter, and other initiatives that are coming forward in terms of transparency. Are you seeing that positive or negative interaction changing?
Definitely, it's a very important question, and I think depending a bit on the final decision of how the carbon intensity is going to be measured, especially the charter has a huge impact on it, and to some extent bigger impact than we as ship owners. And that is a dilemma, and it requires a totally different dialogue between the owners and the charters, possibly new type of contracts. And I agree with Kristian in his view that, you know, we need to maybe, I mean, so far it's more sticks than a carrot, but here we need to work together. And I think we should have a common goal here. One example, one initiative we've been taking in the group is that we are co-creating a dry bulk platform, the Copenhagen Commercial Platform. And the whole idea behind that is to bring like-minded owners and charters together and create that necessary transparency to bring the total emissions down. We see a real interest there. So I think it's a spurring interest among the charter as well to contribute here. In the LNG industry, one thing that is talked a lot about now is carbon neutral LNG, where again the charters suddenly become much more interested in the carbon footprint on the shipping, and where it benefits them to actually bring it down, and you are aligning the principle. And I think also in the LNG industry, we maybe are a bit more fortunate that we come from a history of very long charters, very close collaboration with our charters. So I'm hopeful, maybe I'm not too optimistic, that in the LNG industry it will be somewhat easier to create that partnership spirit that is definitely going to be required. But I think it's going to be some interesting discussions to be held, both on the operational side and also possibly on the legal side.
Thank you, Yngvil. And it builds, I think, on what Oystein was saying earlier around this anatomy of the fuel from a well to wake charterer owner operator relationship being so important now if we look at carbon zero shipping for LNG transportation. So thank you for that. And then Lars Barstad, I'm going to come back to you, I think, around this going green by black numbers, and ask the same question, I think, around the relationship change that needs to happen to accelerate your ability to maybe make some economic decisions, as well as the pressures from EEXI and CII. So Lars, what's your thoughts there?
Well, first of all, I'd like to say that we're gradually, you know, our biggest clients are obviously the oil majors, and we're gradually seeing now that the kind of the oil majors' boardroom ambitions is starting slowly to trickle down to their chartering departments. You know, obviously price is the biggest denominator for them. You know, they don't really care too much as they charter away right now, but they're starting to raise questions. And also there is like this interest in, you know, how can we make something with this voyage in order to potentially make it carbon neutral and so forth. So we're not there yet, but we were starting to move in that direction. We also see the trading houses who see carbon as a commodity too, looking at opportunities in this market and looking at how they can maybe not profit from it, but at least be prepared for the shift coming. So, and for an owner, then it's super important to kind of have good housekeeping and manage your own data, basically, with regards to emissions. And this is an effort that we started a bit over a year back, called the Decarbonization Project, which we do together with DNV. And it's basically to be able to monitor our emissions closely. And you know, the model isn't set yet, but if you imagine an ETS trading model where the charter is exposed to the CO2 emissions from last discharge until kind of the end of the voyage, then obviously you need to be able to to provide that kind of data and indicate to the owner in a negotiation process what the footprint will be for this particular voyage. And in that, you are going to end up kind of in a situation where you are very, very much kind of involved in that part of the value chain as well for with your charterers. But what we do now, we're kind of in this exploration phase where we discuss openly and initially with the oil majors in how we together can kind of find a solution and serve this, at least now.
Thanks very much indeed, Lars. And I think it's very much at the heart of the things like the Sea Cargo Charter, where we're looking at the noon reporting on a daily basis, AERs, etc., on single voyages. So thanks for that, and clearly some good drive from you and your business in that direction. So if we take a step backwards and look more broadly now, I'm going to come to Lars Christian on this. What do you see as the biggest drivers of change in the decade ahead? And what do you think will differentiate the winners and losers, let's say, as Maritime comes to terms with some of these trends? Lars Christian.
I think it's maybe not it's not new in the discussion, but I think it's clearly going to be regulations and potential revised regulations. So I just hope authorities don't fudge it, because if we look back on ballast water treatment systems, for example, this was a convention from, I think, 2004, and still by this date ships are sailing around with exemptions to it. So some of these things takes unnecessarily a long time to get effective, and they're not really effective. IMO 2020 was a whole lot of fun and games and positioning around things, and it could have been done a lot simpler. So I think the analogy to the stick and the carrot is quite good. We really need something which is clear and effective. And I mean, back to Yngvil's point, there's lots of collaboration in the market needed, and there's lots of owners, charters willing to collaborate. But the whole clue is how to price this. It needs to be priced. Incentives work, and especially in an asset-based industry like ours, we need incentives, and it's best done through price. So there needs to be a stick and a carrot approach, not one or the other. So I think for individual companies, we need to stay curious and adaptable. And I mean, we're not in Belships, we're not really betting the farm on a certain scenario. We're trying to stay light-footed. We're trying to be able to adapt, turn around the business for opportunities and challenges, and try and be a responsible ship owner at the same time. So we've actually invested a lot in the soft qualities during this COVID-19 process. We've actually hired lots of good people. We've doubled the number of people hired here in the office in Oslo. We set up a new office in Singapore with good people, and also in Melbourne, and increase the number of people hired in Bangkok. So I think part of our plan is to take use of technology in the coming decade. We don't have to invent it ourselves. It's lots of the technology is out there, but invest in people and build a shipping platform with clients and knowledge, because I think that's always going to be a good basis for adapting to this, because I think we're going to have so many curveballs and back and forth on indices and regulations that it's really about being adaptable.
Thank you very much indeed for that, Lars. And I think we've probably got time for just one more question before we conclude here. So I'm going to go to you, Yngvil, if you're okay, and basically look at how would your company define success in the industry, and what would be the hallmarks of the fleet organizations that remain dominant in 2030 and 2050?
Okay, I got 1 minute to answer that. I think our mission in BW Group is to deliver energy for the world today while finding solutions for tomorrow, and to kind of to manage both of those. Some people might say that they don't go together, but I think that's very important to us. So creating profitable and sustainable business both for today and tomorrow. And to do that, I think you need to go back to the Lars Christian point. You need to be nimble and agile. You need to have a strong competence to find solution in that area. Collaborative mindset, and I think you have to be pretty courageous.
I love that. So I'm going to say thank you very much indeed to all the panelists today for a very rich conversation around how you're all navigating your corporate strategies. In addition, many thanks to Capital Link for hosting the session today. Clearly, we as an industry have a lot of challenges ahead, and the boardroom discussions are centered around those regulatory changes and decarbonisation ambitions cost effectively, which is a great start. So with that, I'm going to say thank you very much again. Stay safe, and we'll see you all again as soon as possible. Thank you.
And many thanks from me as well. Great discussion. Thank you to all of you for being with us, and thank you, Andy, for moderating the panel. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.